Hey guys, Eric Knight here, and this is the Night Show. Today is December 13th, 2012. Had some pretty interesting news come out yesterday when Federal Reserve Chairman Ben Bernanke announced that we're going to start printing some more money here next month. Now, for those of you that do or do not know, we began QE3 back in September of this last year, which means that we're printing $40 billion a month out of thin air to purchase mortgage-backed securities. Now, starting next month or January 1st, we're going to begin to print an additional $45 billion every single month to purchase long-term bonds. Now, you put these two numbers together, and we have $85 billion printed out of thin air every single month, basically indefinitely, until we have some sort of better recovery. Now, that means that our Federal Reserve's balance sheet is going to expand by nearly $1 trillion every single year. And there were certain parameters put around this, but who's to say that in this next year we're not going to have another dose of more stimulus, more printing, another program? I mean, it only took a couple months to go from $40 billion now to a projected $85 billion a month, which these are pretty big numbers. So the parameters that were placed out for this printing had to do with the unemployment rate and inflation rates. Now, he had said that if unemployment drops to 6.5% or below, at that point we would ease off the printing. However, he had also said, to my understanding, that these would have to be the actual figures, for better or worse. Now, what does that really mean? When I look at what unemployment is today, they say it's, I believe, around 7.7%. And I see this as a pretty fictitious number, and I believe he sees this as well. Unemployment was, over 9%, and supposedly it's dropped significantly because we're in some sort of economic recovery. However, the way I see it is, what makes more sense to me, we have more people dropping out of the workforce entirely. People have gotten off of unemployment. People have just completely given up looking for full-time employment, as opposed to what they claim, that all of these people are actually going back to work. And I don't believe that's the real case. The second factor, or I suppose more along those lines, which is another big concern, is if we do go off this so-called fiscal cliff I've been talking about here pretty extensively, it's forecasted that we're going to go into another pretty deep recession in the coming years. So if this does happen, the unemployment figure, if it's ever even realistic or possible at all, won't be going down below 6.5% anytime in our near future. Now, the second factor was rates of inflation. Now, before we go into this, I want to just kind of give you my take on inflation, because this is obviously going to be the biggest calamity that comes from all this printing. But look at inflation in terms of this. We have, let's say I own a company, and my company is valued at $1,000, and I have 1,000 shares to sell. Now, let's say you come in and you buy one share for $1. Now, I go out and produce an additional 1,000 shares, or offer another 1,000 shares of my company, and my company's still valued at $1,000. Now, if there's 2,000 shares, your share goes from $1 and it's cut in half to now 50 cents. And inflation is no different than that scenario that I just explained. Now, he had said that when inflation, if it gets out of control to a certain extent, at that point they will ease off this printing. However, they're not going to use globally traded commodities to factor into the rise in inflation. So these are things such as energy and food prices. Two of the most basic necessities that people use every single day and we need to survive. Also, these the prices of these things have gone up dramatically over the last several years. Even for myself, I'm a traveling salesman. And when I started my job 3.5 years ago, gas prices were probably right around $2 a gallon, maybe a little bit less, depending on what time of the year it was. Today, we're anywhere between, $3.10 up to $4 a gallon, again, depending on what time of the year. On top of that, we have food prices. I remember when I was a kid and I used to go to the grocery store with my mom, an expensive trip to the grocery store was $100, but we had a cart full of food. And we could feed 4 people for a whole week, if not more, off that whole cart of food. Today, I can go to the grocery store for myself, even buying the generic stuff, filling up one of these little hand baskets, and easily exceed $100 worth of spending at a grocery store. The prices of food have went up dramatically, and the biggest cause of that, I believe, is obviously inflation. So with that, the printing is going to go on for a long time. And I thought QE3 and the announcement of $40 billion of mortgage-backed securities was pretty much coffin nails to this economy. Yet now we seem to step up the ante with $85 billion now. We're just putting this thing into overdrive. We're speeding up the process to the destruction of this nation. The inflation is going to crush the middle class, especially. We also look at senior citizens, these people that live or die by their Social Security check. And I really mean that. I see these people every day in my profession. They just can't wait until that next pay period. They can't afford anything else because that's all they have. And when prices skyrocket and go through the roof, they're going to be able to buy less and less and less, and their quality and standard of living is going to drop dramatically. So I believe this, again, is further just driving these coffin nails deeper into our economy. It's going to get ugly. We had the stock bubble. Nobody saw that coming in the mainstream. Then we have the bond or this housing bubble. Nobody saw that one coming. Now we have the bond bubble. When this thing pops, it's going to be ridiculous. It's not a matter of if anymore. It's a matter of when this economy melts down or we just completely destroy the dollar. It's going to be like Zimbabwe here in the United States, where they hyperinflated their currency to an extent where it takes something like $1 trillion or more just to buy a dozen eggs over in that country. It's no different here. So my advice, your money's doing you really no good sitting in a bank account. You look at, you're leaving your money there, you might be drawing 0.25% or 0.5% of interest. They're lending it out at extremely high interest rates. They're using your money and they love that. You're losing your purchasing power every single day it's sitting there. I would go out and invest in things that actually have real value, real assets. I think precious metals, again, it's not too late to get into that. I think those are the things that are really going to have value when the dollar just completely melts down. Again, we had gold was around $250 an ounce 10 years ago, and now it's what? Probably over $1,700 an ounce. It's went up like 600% or so just over the last decade. And again, when the dollar collapses and melts down completely, these are the things that are really going to have any real value. That and, say, food. I mean, obviously, you need to survive. There's a book that I just finished. I would highly encourage people to go out and buy. It's an easy read. It's The Real Crash by Peter Schiff. He goes through a lot of these things in detail and talks about some of the problems that we face. If you look at the size of our national debt, how big the interest payment on that debt's getting, even at these low interest rates, we have things like all the unfunded liabilities, these promises that our politicians have made to us that they just can't keep, and that's just a fact. At some point, these things, they already are bankrupt, and at some point, the money has to come from somewhere. It's just not there. And again, the only solution is running that printing press more. So I don't see this QE to infinity and what I would call beyond now stopping here. I think it's just going to get worse and worse and worse, and they're going to find another either program or room for more stimulus that we're going to need to further destroy this economy and our dollars. So I would prepare yourself, go out and educate yourself. Don't take my word for all this, but just go out and get an education and form an opinion for yourself. I think in great times of distress and, if we do have an economic disaster like the Great Depression, there's also an immense amount of opportunity on the other side of these calamities. The Great Depression produced more millionaires than any other time throughout our history. So these are things that if you see it coming, you know how to prepare for it. You can also find the opportunity and come out on top once things wrap up. So I'll leave it with that today. Please educate yourself, prepare yourself. Thanks for tuning in tonight. This is Eric Knight, The Night Show. We'll have much more to talk about later on tomorrow.